Hi, this is James Shug at Westpac with the end of day report for Thursday, February the 9th. Look, a pretty positive day on equity markets today for various reasons. The Dow in the US actually hit a new intraday all-time high, I think, above 12,900, although the gain there at the moment is only fairly modest, up about 0.1%. European markets are in positive territory for the first day in four. The FTSE's up 1/3% in London, French market up 0.4%, and the Germans up 0.6% at the close. The Italians, however, lost 0.1% today, but most of the European markets were higher. The main stories driving this, well, firstly, the Bank of England put in place or announced at least another 50 billion worth of asset purchases or quantitative easing, which will probably take them through to May. That will take the total size of that program to £325 billion. They cited concerns that the UK economy might be impacted negatively from what's happening in Europe, and that inflation without this further stimulus would substantially undershoot the 2% inflation target in 2 years' time. The European Central Bank left interest rates on hold at 1%. They acknowledged that the fourth quarter, just finished at the end of last year, would be reported as very weak, but that there might be a modest recovery through the course of 2012. They assessed the risks to that growth outlook as being to the downside, whereas in January they talked about substantial downside risks. So, and certainly the ECB's long-term refinancing operation, which they did in December last year, does seem to have improved market confidence substantially, and as President Draghi of the ECB said, it probably helped avert an interbank credit crunch from intensifying. So they're reasonably comfortable with the way things have progressed since their last meeting in January, and certainly since they last cut rates back in December. Now, our view is that things can certainly turn sour again in Europe. There's lots of bad news to come, but for the time being at least it seems that policy there is on hold. The other positive development today, or potentially positive, was that the Greek Prime Minister's office has just put out a press release saying that Greek politicians have agreed on the austerity measures that they're going to put into place, which they hope will be sufficient to justify them receiving the next round of bailout payments, hopefully in time for them to avoid a default in March, when there's a substantial bond, or a range of substantial bond maturities due, and they simply haven't got the cash to pay to meet those obligations if they don't get the next round of bailout payments. But they won't get those if the austerity measures aren't deemed enough to achieve the required amount of budget deficit reduction, and judgment still has to be made on that by EU, IMF and ECB officials. There's a finance ministers meeting, EU finance ministers meeting going on in Brussels as I speak. This may be discussed, I'm sure this will be discussed, although we're not going to get any decision on that bailout for Greece just yet. But at least Greeks themselves have agreed on what sort of austerity they're prepared to wear. So they're the main developments in Europe. In the US, we had another fall in the latest week in terms of initial jobless claims, which is a measure of the extent to which Americans are being laid off. The level of new claims there is now down on where it was just before the recession in 2008. So that's another sign that the labour market, at least for now, seems to be on a bit of an improving trend in the US. Oh, and I forgot to mention, pretty decent industrial production figures were released in the UK for December. Now we know the UK economy contracted in the last quarter of 2011. These healthy industrial numbers suggest that at least that minus 0.2% contraction won't be revised to anything steeper. So that's the main news. I've already given you the market movements. On commodity prices though, mostly positive. Copper prices up 1.7%. Oil prices up 1.1% at $99.83 a barrel. Gold is at $1,738 an ounce. That's a gain of 0.4%. The Aussie dollar is at 81.3 euro cents, down from 82 earlier this week, against the US dollar just on 1.08, where it's been hovering for some time now. What to look forward to? We've got the Reserve Bank of Australia's monetary policy statement coming out today. The quarterly assessment of how the economy is doing and what the outlook for inflation is and so on. Now, the statement they released on Tuesday following their on-hold interest rate decision suggested they sounded a little bit less pessimistic about the risks confronting the Australian economy. Just sometimes the vibe or the tone of the statement on monetary policy does seem to differ a bit from the press release they put out 3 days prior. So we'll be watching to see what sort of detail is in that statement. At the moment, we think the Reserve Bank will cut interest rates again, possibly as soon as March. We may revise that view once we've seen the statement. So that's it for now. I'll be back again, same time tomorrow.